Good afternoon. I hope you still have the energy, and I hope you have refreshed. Today, I will speak about digital bank, which is mostly the service we provide to our client, and we provide to our client throughout the Southeast Asia, in Indonesia, Singapore, Thailand, Vietnam, and some emerging region like Laos, Cambodia, and Myanmar. So this talk actually combining between technology and also business. So it's not to deep dive to tech, but it's more like to give you insights about what we have done. Okay, let's start the talk. So as introduced, I'm the CTO and also the country director of Tridorian in Thailand. And actually, I have my colleague who helped me in making this material also, Natawat, but he is not coming today. Okay. So we are Tridorian. We're operating in the. We have office in 3 countries: in Sweden, in Singapore, and Thailand. And our business is transformation consulting. We help traditional bank. Let's say they want to start digital bank, digital channel. We help them to start how they can do it. Second is the pure digital bank. Let's say some conglomerates wants to build a digital bank or digital wallet, and then we help them on consulting on that. And of course, fintechs like online lending and insurance that we help in this one. So usually, because the question is about how successful digital bank, we start with question usually. And then throughout our experience with dealing with that, traditional bank, digital banks, fintechs, we have filter what kind of question that they ask that can show, that can be like right indicator whether they are success or not. The key is in the precision of the question, in the detail, and in the depth. So actually, this is like a priority question. So when we approach like traditional bank, hey, I want to start digital bank, or then we want to know the question from their side. So the priority number 1 usually how to calculate the cost per transaction. So you know that every bank or every fintech is transaction based. And then those transactions is supported by the technology, which is the infrastructure. It can be cloud, it can be on-premise. But the most important question will be like how much is the cost per transaction? Because let's say the transaction growing in the terms of volume from 0, let's say to 100 million per day, then we need to know how much the cost of it. The second one is because banking is the highly regulated business, so the question will be about how to comply with the local regulation. In every country has different regulation. Indonesia has like data residency regulation. Meanwhile, Thailand and Singapore is more relaxed on that. And there's like emerging country like Laos, they don't have like very specific regulation. They will take like the international standard like ISO 27001 in there. Third is, it is more to the operational. I mean, is the tech people always aware about this. How to keep the SLA, how to keep the availability like 999, 49, 59s. And then next is more about scale. So there will be like a talk between business and tech on this question, because let's say we have 0 customer, how much the cost for the tech or for the infrastructure? And let's say we have 1 million active customer per minute, how much the cost will grow? Actually, we want the graphic to be flat. It's not like exponential increase that graphic, but of course that requires optimization. That's the challenge that usually we help our clients to solve. The next one is about disaster and failure, how to keep the business and data is keep available. Let's say the data center or the cloud is not available, so they need to keep like a multiple copy of the data. Or if the regulation wants them to have like local copy of the data, then we also provide like how we can do that kind of thing. The next question is about how to protect from, I think like ransomware is quite popular in the past, but right now it's not less popular because when everyone moved to the cloud, the protection is better. And then hacker and then other threats. There is like penetration tests, there is like firewalls that involve in answering this kind of question. The last one is usually, this is like the question that the CIO or CTO needs to answer to the business or to the CEO and all other stakeholders, how to choose the right core banking and the cloud technology in here. These are the questions that we help our client to make them success implementing the digital bank or fintechs or even enabling like new digital channel in the financial service. Then usually when the service already there, we have like a next question because business always want continuous optimization in here. So they will start to ask questions in the area of the customer experience, like how many minutes of new customer doing the KYC. I believe like everyone in here, if you are registering a digital wallet or banks, then you need to submit your document. Sometimes they require you to do the video call. So how many minutes until you get your account approved in the KYC process? And then second one is more into like, let's say the mobile app experience. How many clicks do you need to do the fund transfer as a user? And then do you need confirmation if you do the transfer? Because perhaps you put the wrong destination of the fund transfer. So this is more into the customer experience. The third one is like checking the review of your application in the App Store and the Play Store. So check like the lowest review. Then it's going into more detail about this one, into like lending application, like how many hours does new loan get approved. I think today, if we talk about online lending, people wants or customer wants to be approved in terms of hours or at least like 48 or 72 hours. But they want less than that. Even they want like 4 hours approved, this is like challenging in both of the technology and the business that I will tell the story in the next following slide. And then meanwhile, bank also need to manage the risk, which is NPL, the non-performing loan. So when banks give the loan and then the client or the customer defaults, cannot repay back, it becomes non-performance. So we use AI and machine learning to predict and forecast, is it like this loan will be non-performing or not? And then we can compare with the actual. And then we can see, is it the prediction and the forecast is good or not? And then how do I know the default? And the topic today, because we talk about the financial inclusion, then I will talk more about good credit that is rejected by the banks in here because of informal income. Because if you apply something to the banks, the first and the basic requirement will be the stable income, which is if you have informal income, then it's very hard for you to get a loan for the bank or the bank to approve that. It must be through the other channel. And I will give more detail about those other channels. So if we see the problem in the Southeast Asia about good credits, about financial inclusion, actually 70% of the adult population is unbanked or underbanked. So it's not supported by the bank. Then where they are getting the loans for? From the family, from the friends, from the employer, if the employer is good enough to give loan, from the co-ops, usually there is like employee co-ops or another co-ops in the community. And then, of course, more negative one in the right from the loan shark, and then from the illegal online peer-to-peer lending, which is, this is like some phenomenon that happened in some part of the Southeast Asia. Meanwhile, of that 70% unbanked or underbanked population, Actually, this is like 69% of the national labor that is doing the micro and small and medium enterprise. So this data show that mostly people in the Southeast Asia actually in the micro, small and medium enterprise business, which is 69%. And then they are also unbanked and underbanked. So it's like 50% of the population which is under this doing the business or becoming the part of the micro and small medium enterprise and also unbanked. And we want to talk more about something in the right, the illegal online peer-to-peer lending. Why? Because actually, if you are bank and then you ignore your client in here because your client cannot get the lending, they will go to this all other channel that in here. But I think the most popular one that the bank, digital bank needs to see is that one, the illegal online peer-to-peer. Okay, I will take the case from Indonesia. So there's like peer-to-peer lending. In Indonesia, it's called pinjol, which is online lending, the meaning. So it's like there's an application, and this is not legal. So people just make the application and then post it in the App Store, or do not post it, just provide the APK, and people can download and then provide like the information, then access to the phone, and then they can borrow money. They can do the micro loan around 0.4 to 50 million IDR. So it's around $30 to 1,000 US dollar for this micro loan. And this is, if you compare to the what happened in the bank, this is very fast. It's approved within hours. And then because usually this is targeting the very low segment in the financial. So this is like people which require urgency, they will do this channel, the online peer-to-peer lending. And yeah, I call it, this one is dark fintech because it is easy approved and it's not regulated. And then if you see the market size, it's actually quite big. It's around, if we convert that value to US dollar, is around 19 billion US dollar. And then the borrower in Indonesia around 73 millions, which is, I think is like 30% of the population of Indonesia in there. So you can see that there is an option in here. There is like legal peer-to-peer lending, which is the number one, legal pinjol, which give the interest is 0.4%. And this is regulated by the authority, monetary authority in Indonesia. So the maximum of the interest per day is 0.4. And then you can calculate like in the year is like 144%. So if you borrow, let's say $100, then you need to pay $244, which is quite big, which is like 2 times more than what you borrow. Meanwhile, this one, the illegal online lending, they have the interest rate like twice, which is bigger, and then it's like, yeah, it's give like almost like 3 times when you return the money. Meanwhile, the banks, this is like an example. The Bank Rakyat Indonesia is the state-owned bank. BCA is the private bank. And then you can see the interest is around 30% in here. So people choose to do the number one, number two. Why? Because the bank ignore and abandon this kind of customer. That's why even the interest rate like almost 8 times, they choose this one because it's easy approved and no hassle to do it. Meanwhile, they don't go to the bank because the bank doesn't have the channel for them to get the credits. So who is using that illegal peer-to-peer lending? I call it, this segment is the firefighting profile. So someone who has like no stable income is having like a daily income, and it's like for daily survival. So they need to borrow not big money but small amount of it, and then it's usually for the basic needs like foods or foods for the kids. And then it's something urgent like health or something. And then, yeah, they are in the heavy pressure. They have no saving. The income they receive is not enough to cover the whole month. So yeah, they need this solution. And then they have more pressure for like education of the child, and then to take care of the core family. If let's say they have spouse and they have child, and then sometime it's also they need to take care of the larger family, like the parents, grandparents, or even like another part of the family, like uncles or aunts or something in here. And there's another part which is like more better than daily survival, is like someone who do the monthly survival. So let's say the income stop in 1 month, then they will have problem. This is what I call monthly survival. And this is mostly the customer type that is like ignored or abandoned by the normal banking right now. So they need like alternative channel, mostly going to that illegal peer-to-peer lending. So the irony is, yeah, people talk about financial literacy, but if you see, the more vulnerable financial you are, actually you need to pay more interest, which is, it's an irony. Actually, you are the one who needs, if you are financial vulnerable, you are the one who needs the support on that one. But actually you get more interest and you get harder to get the credit approved. Like, yeah, conventional bank doesn't provide this, then you go to online lending or more digital lending that let's say the banks creates different kind of business on that. And then, yeah, then the last one is you get more harsh treatment in the debt collection. Because if you see the people in the firefighting, their financial is not stable, and then they might like go default or cannot pay, and then they will get this harsh treatment in the debt collection. So this is an irony. I mean, the one who needs the financial support actually take the burden more, take the interest more, and yeah, it's actually making their life harder on this one. Meanwhile, if we are connecting financial to the life cycle of the people, so this is imagine like, this is a research from the Publicis Sapient. So imagine like we connect financial service to the life cycle. We imagine like new kids in the block means like people who just get the full-time job, and then they need some emergency fund to access. And then independent is more like people that's struggling in the firefighting. Hopeful newlyweds is like people who just married but they don't have any children or they don't have any burden, so they can save more. And struggling family is like people who married and then they have like more burden, and then the financial cannot support them. So this one is like someone who definitely requires this kind of lending service. Meanwhile, the more stable is like future-ready parents and the micro entrepreneur. But I mean, this research is based on the traditional family concept. If we do the diversity inclusion, they might have like different product. This is something missing in the banking right now. I mean, I think since we are open now, and it's no longer like traditional family. So if we, but right now there is no service from the banking that is like including something other than traditional family. Okay, so I'm talking from the customer side before. Now I'm talking from the bank side. Why they give the more interest for the people with the financial vulnerability? Okay, the answer is, actually in the bank, there is like 3 steps of the, if you see in the bank, there is a 3 steps of cost, how they operate in this one. In the lower level is survival. I mean, bank needs to survive from the frauds, from the fail in the risk, And this is involving like risk management and also the collection. So to make the bank healthy, the risk management must be very good, and also the collection also good. And the number like non-performing loan should be less than 5% in here. This is helping the bank to survive. Second is about operating. There's cost in the operating from the administration, acquisition of the client, and the management. And the biggest one actually when you start digital bank is the cost for the compliant or license, because the license is very limited. And when a bank apply a license to the government, it can be cost, some research say it can be cost like $1 billion to get a license, let's say in Singapore. And then the fourth one is the cost of the infrastructure, which can be like cloud or data center of on-premise. So what we help in here is like how we can optimize all these costs. And the highest one is the something that gives highest value to the customer. This is more to the customer that have certain level of the fund that is saving in the banks, and they get the customer experience and loyalty programs. So yes, there is in equal customer experience. If the banks calculate all these costs from the high value until the survival, and then they feel like the client is like is not like loss, then the bank can give you that one, the customer experience and the loyalty program. But that one, the micro loan, because the amount is very small, and then if you calculate even like the interest is like 3 times, the money that the bank gets is also small. So that's why the bank give like more interest, because of the risk and because of the operating cost in here. Yeah, that's why we have this problem. The more financial vulnerable, the more interest, and the harder to get approved in the credit. So actually, we try to do research more how we can solve that problem. I mean, how we can solve that problem. And then the key perhaps in the risk management, because in the end, bank needs to survive. If they give the credit that is high risk and then it's default, then it will not happen. So to answer these 3 kind of thing from the PwC Digital Banking Survey, what the initiative that the bank's doing, they want to digitalizing the customer channel, which is correlate with the number 1, the customer experience and the loyalty program. Second is about digitizing the operation or get the operating efficiency, which is correlate with that operating in administration, acquisition, management, compliance and infrastructure. They want everything to be automated in there, so they can have less cost on there. The third one is something super important, because today we live in the era of data. I mean, data is everywhere, and we can utilize data to help, especially in the risk management. We can create what we call the partner ecosystem. It's like the ecosystem of the whole financial service, so we can help on that risk management. Go. So what innovation we do to managing risk? I call it the mathematics of trust. So in the end, you need to create a credit scoring. But what kind of data you build for that credit scoring? Is it like only your internal data? That's mean like the data that you get from KYC, like the profile, the demography, and then perhaps the 3 months utility bills, something like that, and the salary statement. That is internal data, but that one is like the traditional way to do it. So you need to leverage the ecosystem data, which is you will involve the fintechs and everything. I will explain the next slide, to create the alternatives credit scoring. So you can have better risk management, so you can have more financial inclusion by having this innovation. So you can you can mitigate more risk, and you can as a bank, they can go beyond their comfort zone right now if they have this alternative credit scoring. In the end, on the behind, we have the data science, which is machine learning and everything that we build on this data. But we also combine with the qualitative approach, which is today we have that one, the AI with the large language model. So we can have the alternative credit scoring that combine the numbers and also the data like language or text in there. And then we have this alternative credit scoring. So this is super important to answer the financial inclusion, because if we continue the existing one using demographic data and the traditional salary and everything, yeah, it might be not work anymore. So how to get this ecosystem data? Yeah, we have banks in here. This is the whole ecosystem of the financial service. And every time we go to a country in Southeast Asia, we see like we need to survey like what is in the banks, what is in the fintechs, what is in other digital platforms like e-commerce, logistic, and many other digital platforms, travel, and then we check what is the government regulation on that, and then we check what the other business, and of course like people as the final stakeholder. And we go one by one. So the bank is the enabler, because the bank is the established institution in this one. So the bank is the enabler in the financial service. And then they are the origin of the things. So the banks need to innovate and start like open banking API. So it will help the other part of the ecosystem, which is the fintechs, the platform, the government, business, and people. Second is like the fintech. The fintech is very important because actually bank cannot solve the problem alone. And there's like many details in that specific area. This is like an opportunity for startup to build the fintech and address specific market. So it's good if there is like fintech big bang in a country, like there's like a lot of fintech in many different area, try to solve very specific problem in that area or in that market. And then from that problem solved, they will get the data. They will get the data, they can build a scoring of behavior. That one, the mathematics of trust from the specific market. And this scoring and this data can be fed back to the banks. So this will help the banks to make better credit scoring, that one, the alternative credit scoring. And since we talk about data, who is going to regulate the data? Let's say, okay, all fintechs get our data, get our behavior data. Can you imagine like, let's say we have the travel data, we have utility data, we have the transaction or wallet data, and then we have even like the movie application. Let's say you buy movie through application, and then all those data fit to the banks. I mean, they know your whole history, which is at some point is a risk. That's why we need the government to create very strong regulation, to create the balance between the stakeholder who has the data in here, and then to create also the standard of interconnection of API between all of these stakeholders in the ecosystem. The next one is the business, which is, this one is the one who enjoys all the things that the banks, fintechs, and the government doing. So they can augment their service by using the banking API, and then they can provide the microloan in the service. Let's say like e-commerce, when they connect to the bank, they can provide like BNPL, buy now, pay later. Yeah, there's something similar like that, but there is like a lot of many other opportunity. And then they can do the embedded banking. This is something like in the Southeast Asia is still very long to go, but I mean like people already talking about this like since 3 or 4 years ago, but it's still not happening very well. We saw like BNPL, but we haven't saw like what's next after that. So this is a lot of opportunity of idea if you are startup. And the last one is people, which is each one of us is like, this is the beneficiary of the whole ecosystem. So we will have like more inclusive access based on our challenge that we face every day, our goals or our lifestyle. We have more option in here. If the whole ecosystem of the financial service is working well. Yeah. So this is my presentation, and yeah, I will still be here for the question. So thank you so much.
All right, thank you. Thank you, Hadi. Have anyone have any question now? Okay, I guess not. So thank you for your talk.
Okay, thank you so much.